Hi guys, my name is Rajan Jagdish and I'm the owner of Tutor4growth, online tutoring website or venture where I teach students accounting finance in the most engaging, practical and interesting manner. Now I'm just making this quick video to show you how the double entry bookkeeping system works and how to really break it down. Now generally what you will hear about double entry is that there's debit and credit, and obviously when you record a transaction you could debit one account and there must be a credit for that transaction as well, but it's not really like clear what it means, like when we say debit or a credit, right? So this tutorial should clear everything, and I'm just gonna launch a whiteboard on the Zoom. So I'm using the Zoom software where I had all the details, so let me just paste that again. So we got this scenario, okay, which I'll be using through this session, and in there I'm just gonna put some transactions. So I had one more, so like the business had rental payments. I'm just gonna quickly put three transactions so that basically you get an idea of how double entry bookkeeping works, right? Now let me just put a value 300 to the rental agency. Now to understand double entry bookkeeping, everyone knows, again I'll repeat myself, that everyone knows that there must be a debit and credit entry, but is there a process that you can use? And there's nothing to be memorized, there's nothing to be to like for us to memorize or anything, but what you can do is you can use something called like acronym, like a debit and credit. So for debits and credits, so you can use something called debt click. Okay, so I'll write you on the screen how it looks. So if I draw here, so it looks like this. You might have seen this at college, university or wherever. Yeah, so you got debit and then you got a credit. So D stands for debits and C stands for credit. Now in terms of your debits, you got some accounts in there. Now you might be familiar with these: expenses, assets. So expenses what you spend money on, assets what you own. You got drawings. This is what a business owner takes out of the business. Uh, then you got click. So you got liabilities in there, which is where obviously you owe something to other company or other person. Then income, which is what you generate for your business through your business activities, and then you got a capital. This is the money that's been invested by the owner, right? Now it took me literally 8 years to understand the real meaning of debits and credits. Now this is not something that is taught at university because or college, or even at, I think if you do it early on in your life in school, like if you're studying in another country, like for in my home country where people do it at school in higher school and 12th standard. Now, in terms of debits and credits, you might look at it as debit as money going out or credit as money coming in, but that's not something useful, because if you use that concept, it won't work for each account, right? Because you will need to do the debits and credit entry depending on whether the money is going out or in. Now, that's not a good way. So I'll show you like a three-step process that you can use to simplify this process. Okay. So the first step is you will identify the accounts. So for every transaction, first you'll be identifying some accounts that you need to work with. Okay. Second step is to identify what is going up and what is going down. Now think about you making payment out of your bank account. The bank is obviously going down, so you got to identify the accounts that you identify. You got to say whether they go up or down. Okay. And finally, you're going to do your debits and your credits. Now we're going to use this transaction that we got on the side, and we're going to see how we can apply it there. Now I'm just showing you as an example, but you don't need to like literally do this every time when you do a transaction. As you practice more, it will come naturally and you know your debits and credits very well. Okay. And this is just for beginner level, so this is just to show you so how you can start and like apply the fundamentals of the bookkeeping, because bookkeeping is like coding for IT. So as you need to know the coding, you need to know bookkeeping for your accounting. Yeah. So let's start with the first transaction. So you got your friend invested 5,000 as capital into the business. So this is where you will identify the accounts. So you got capital account, that's the first account. and then you got a bank account. Okay. Now, as the owner is putting money into the business, now I forgot to like introduce the whole scenario. So basically, you got a friend who started this business. You're doing the bookkeeping for him. He provided you with some transaction. There's an error here, so basically it should be 3. And basically, you are required to do the double entry for each transaction, which are also known as journal entries. So we identified the 2 accounts for the first transaction. Okay. Now, the second thing is to see is whether the account is going up or down. Now, as the owner is putting more money into the business as capital, this capital will go up. Okay. The bank, as the money is increasing in the business bank account, this is the business bank account we're talking about. So the money will go up. So there will be like upward arrows in both. Okay. The final step is to doing the debit, doing the debits credits. Now, this is very important because you need to first identify the accounts this account belongs to. Okay. So let's look at capital. So capital, obviously, it's straightforward. So it's a credit account. Now, you know the way this debit and credit works is that debit simply means left. Okay. This one means, I should say right. And it just means that now you might think, okay, debit means left, credit means right. But what does it mean in like, how can we apply it? Now, just on its own, if I say, if I debit something, I debit an account, it doesn't mean anything unless I say I debit the bank. That then it means something, that I'm debiting the bank. That means I'm increasing the value of the bank, because bank is an asset account. Okay, an asset is a debit account. Okay, I repeat that one more time. So you got bank, which is an asset account, and as asset is part of debit class. So now these 6 are known as elements of accounting. Okay, so asset is a debit. So to show the increase, you put it on debit side. Now think about when we say debit, like a bank is an asset account. So you have like a T account, and the balance brought down will always start on the debit side. Okay, whenever there's an increase in transaction, you put it on this side. Whenever this account reduces, like you make a payment, it goes on the other side. Okay, just for illustration purposes. Now, finally, in terms of debits and credits, capital is a credit account. It is going up to show the increase you credit for. Bank again is going up. It's a debit account. You debit it. Okay. Second thing is the business had capital expenditure of 1,000 as they need the computer. So 2 accounts. This is pretty much similar to what we did before, but now you had computer as a new account. Then you have bank as another account because money is going from the bank. Okay. Although they are not said here, but they are not told you here. But also you gotta, so in some cases you got to like also use the logic rather than like taking word by word everything. Okay. So the second thing, which account is going up or down? So computer is going up for sure. Bank is going down because money is going out, right? So the money is reducing. So in terms of the asset, computer as an asset, it is going up. So you want to debit it to show the increase. In terms of bank, it is going down. Bank is an asset to like show the decrease. You want to credit as is shown here. Well, okay, as an example. Finally, you have the third transaction, which is a rental payment of 300 to the agency. Now, rental payment is an expense, so I just put it rent, and the third one is a bank because again, the money would be going out from the bank. Now, rental expense is going up because the expense has increased, and bank is going down again. Now, in terms of your double entry, rent is an expense account, is a debit to show the increase, you debit it, and bank is going down and is an asset to show a decrease, you're crediting it. And if that makes sense to you, I can pretty much, tell you that you can nail the double entry. You can understand it rather than like you making assumption, you guessing, or you saying that, okay, rent is an expense, I debit it, the other one will be debt credit. And then you don't have to guess anything, right? So if you follow this process, if you work with it, if you practice a little bit more, then I'm sure that you'll be able to grasp the concept of double entry bookkeeping, which is basically a language of accounting, right? Now, if you enjoyed this video, if you feel that, okay, this was something that you were not taught at school, college, or university, and this was something new, a process that I actually built to, and this is what I use at my Tutor for Growth online business, right? Now, I teach students this method and I've had great success with it. So try it, apply it, and see how it works. If you got any question about it, just leave it down in the comments and I'll reply to each one. And Yeah, and if you got any suggestion for more videos, just let me know and just put it in the comments. So I'll make some videos on that. And till then, thank you so much for watching the video, and give it a like, please, and share the video, share the channel, and subscribe to it if you want to miss, like if you don't want to miss on any other new video. Okay, thank you.